Hello, ladies and gentlemen. Welcome to Triple N Media. I am NIK NIKAM. In this presentation, we're going to look at the stocks technical analysis. The focus is on Bollinger Bands. Let's take a quick look at the background behind Bollinger Bands and how we can apply that in real time. I'm talking about real time ETFs or stocks in terms of making decisions about when to enter the market, when to stay in the market, and when to get out of the market. Remember, technical indicators are a summation of all the fundamental and technical analysis of the greatest minds who have put millions of dollars into that market in that particular stock, ETF, or option, whatever you're dealing with. Let's just focus on Bollinger Bands. Bollinger Bands, just like the trend lines, the moving averages, the stochastics, the MACD and the RSI, it is another very useful technical analytical tool. The amazing thing about the Bollinger Bands is that it can be applied to 1 minute time intervals, 5 minutes, 10 minutes, 15 minutes, hourly, daily, weekly, or monthly charts, and it holds good as far as its value in helping us to look at entry, stay, or exit points. It also helps us to identify impulsive waves which can break through the Bollinger Band out boundaries. It helps us to narrow down our buy signals, the points of entry. And it also helps us to minimize the number of bad trades we may do. Remember, none of the technical analyses are 100% proof. If it is, then you would have only one. If you're doing better than 50%, then you're lucky. You want to combine multiple technical indicators when you're in doubt before you pull that trigger, because that trigger could cost you $100 or maybe $10 million. The one important thing that any one of these technical analysis gives us is an edge over more disciplined approach to entering the market or exiting the market. Especially when we enter the market, we are under the assumption the prices are going to go up. But our assumptions could be wrong 50% of the time. That means if we are wrong 50% of the time, none of the indicators are going to help. But if we follow the indicator guidelines, and if you're not sure, if you use other indicators to confirm your decision, then you may improve your chances up to 60 or 65%, in which case you stay afloat with your money and some profit to trade on the next day. The most important thing is we use these technical indicators to reduce our risk of losing our shirt and pants. That is the key thing. Here are some things that are particular to Bollinger Bands. Yes, I'm going on a long wind, but I have to cover these basics so that when we see the charts, it makes a lot of sense. Bollinger Band has a 20-point exponential moving average. On top of that and below that are two lines. One is the red line, that means, hey, watch out. The second one is the green line at the bottom, which means, hey, maybe it's time to jump on the gravy train. I hope so. And these two lines are like two standard deviations from the central exponential moving average. And they can be changed. I'm going to show you how to do it in my software. The beauty of this is over 90% of the price movements happen between these two bands. So they just zigzag inside these bands, and it might give you opportunity to get in and out of the market if you're like a day trader. The Bollinger Bands have certain specific characteristics. It has a bulge. That's when you're dealing with an impulse. Wave 1 or wave 3 or wave 5 in Elliott wave analysis, especially if you have wave 3, it is going to just pierce through those Bollinger Bands and stretch them into a bubble. And it also helps us to identify double top, double bottom, trend reversals. Bollinger talks about 22 points that you can look for in Bollinger Bands. And another important thing is when these bands going from a bubble, they can go into like a narrow strip. It's called the squeeze. I call it the choke. When you see that, you better be prepared because it's going to explode either in the upward direction or the downward direction. That's when you have to use other indicators to see if it can help you to navigate. The main trend might help you. If you have a bubble and the main trend is going up, chances are after this consolidation, the prices are going to go up. I always include multiple parameters to fine-tune my entry and exit. You just can't put all your eggs in one basket because none of them are 100%. If you can improve your odds from 50% to 60 or 65%, you are ahead of the game. And basically what you and I are doing, the retail investors, is following the greatest minds that are moving the price over time. If we can follow what they are doing, and if we can understand their psychology through these technical indicators, we just get in and out somewhere between the 2 points, then that's the purpose of the technical analysis. So much for, this is a presentation I did on Elliott wave analysis in dealing with stocks like QQQ, SPY or Diamond. Take a look at that. Anyway, let me get back to the waves forms here. Let's see, we go to like a 2-year period. All right, so let's see how we can identify some of the characteristics of the Bollinger Bands. First of all, I should have a second moving average here. This is where in my software, which is from Fidelity, I can change the line colors if I want the background to like, if I want an yellow, but I don't think I want to do an yellow. See, you get a nice yellow envelope. And this is the top line. This is the bottom line. There should be a moving average here. I don't know if it's turned on. Probably not. That's okay. I'll just leave it here so it's easier on the eyes. Okay, let's identify some telltale signs. Here we are seeing a bubble, sort of like this is a bubble. As you can see, it is piercing through the bottom one. And here you see a double bottom. That may be an indication that we are coming towards the end of this impulsive wave. Remember, based on the Elliott waves, there are 3 impulsive waves. Wave 1, then we have wave 2 correction. Wave 3, the most impulsive. Then we have wave 4, the most complex correction. Then we have wave 5. So this could be like 1, 2, 3, then 4, 5. So this helps us to identify from different technical approaches as to what we are dealing with. That's the one piercing through the Bollinger Bands. And we see the same thing here. This is an impulsive wave here. We didn't see the double top, but nonetheless, when it piercing through these Bollinger Bands, that means you're probably in an impulsive, you're most likely in an impulsive wave. So watch out, because this can go on for some time. You need a confirmation with something else to see if this is coming to an end. And here was a very good example of a double bottom. Remember, if you see a double bottom, when it is pulling back and trying to make another bottom, and then it pulls up, that could be the sign of a reversal of a trend. So we got that one out of the way. And here's another bubble. But luckily this bubble, because it had such a big upswing here and pulling it all the way, we are not seeing that bubble effect, this impulsive effect, even though this is a correction, but it is quite change in direction. And here we see another double bottom. So we are beginning to recognize some pattern here. So here's another one. It is bracing the top of the Bollinger Bands envelope. And it tells us the general direction of the market. So this is, let me get a little pen here. So if you see, this is our general trend here. And I talked about double top. I'm sorry, double bottom. Here's the double bottom. We didn't see anything. And this is a narrow band. I'm going to show on a smaller time frame how they can get extremely narrow. So this is the squeeze. And when the squeeze happens, it can break to the upside or the downside. But if you look at the main trend, if the main trend is this way, then you expect this one to break out to the upside. Let's go on a smaller time scale here. Okay, this is okay, let me go back for 1 second. Let me look at, I said it's multiple stocks. So this is QQQ. Let's look at S&P 500, that's SPY, which is, and this is when the market collapsed in March 2020. As you can see, well, I don't know if you call this a double top, but anyway, it just just pierce. And we didn't really get a double bottom, but nonetheless, it was going here. You don't want to enter the market anywhere here from here because this is a falling knife according to the Elliott wave principle. And when you're trying to catch a falling knife, you could lose your hand. So you won't be able to click that mouse anymore. All right, so let's keep, again, it's piercing through this here. So this is a typical bubble. And here is a consolidation, which is similar to the one we saw with QQQ. Let's go to diamonds here. And diamonds, we have the same thing. And look at, we had the same bubble here. And here is a little consolidation here. And here, again, we see some widening of this. That means there are big movements in the stock prices. Let's go to a smaller time frame, and that's where it becomes quite interesting. Let's go to like 15-minute intervals. If you're like an intermediate trader, let's go to like 3 months. Okay, we can see much better some of the things I wanted to show. First of all, as I said, when this is piercing through these lines, this is an impulsive wave. And if you see a double bottom or a top, we may not be. But here again, it was piercing through the top line and there is consolidation here. That means you may be looking for a reversal. Again, this has to be combined with volume according to Bollinger. So let's put some volume chart here and let's see if it makes sense. And on a downward drift, he says if there's a huge volume, of course we can't say for sure, there's a big volume, it may support your hypothesis. And this is the consolidation phase. But our trend here is going up. Since our trend is going up, when you see consolidation, more than likely it is going to go up. So that is one way to use these Bollinger Bands, but I won't put 100% of my trust in any one single trading model. On the other hand, I am going to, let me close this and find another one. Okay, here I have multiple parameters that I can use, which has the Bollinger Bands. It has the parabolic source. We also have the stochastic here. Bollinger recommends to use it in combination with the MACD. I did a video on stochastic, MACD and RSI, which is good. I have shown which one of them comes first in a turning point area. For example, here, if we were to draw a trend line, let's do a trend line here. And here was a clear-cut change in the market, like this up one. Let's see, the stochastic came right on time here. The MACD was not giving a clear cut because it's supposed to cross this line. It is too late. By that time, your price has already moved half the way. And the RSI helped us here. And the second thing is the Bollinger Bands also said we are in a oversold situation. Then we had a slight pause here. Of course, we didn't see a double bottom, but doesn't matter because there are other indicators which are helping us to say maybe this is a good point of entry. I mean, that's what I would look at. So by combining multiple technical analysis, we can fine-tune our approach and always put a stop loss, so that if was wrong, all you're going to lose is that amount of money between what you paid and the stop loss gap. And this is the squeeze. And this is a squeeze that happened, but the upswing was very short-lived, only 3 bars here, and after that the debacle of the NASDAQ started on February 16th, and it looks like it has just recovered recently. This is my wave, and you can see there is a long period of consolidation, which is basically a correction before it went up and then started the entire cascading of this correction we saw in the last 3 weeks in the NASDAQ. And you can look at the diamonds also. This is a situation where we had the same similarity, but it cleared the previous high and is going up. That is diamonds. Then let's look at SPY. Diamond is, okay, here February 16th. Okay, this is where all the markets started to go down. Let me use this pen for a second. This is the point where it started. They went down here, and now we have the second limb. If this is A, according to this one, then we are in part B, whereas S&P and diamonds are ahead of the tech. But don't worry, because if you were to look at tech, as you can see from the high here to this one, this has almost made more than 30% recovery. So it may take it like 10 points each day. It may take another 2-3 days for it to go past the upper limit reached on February 16th. So this is a very long-winded explanation of how to use Bollinger Bands. And it is good when we combine that with other indicators like the slow stochastic, MACD. When the MACD crosses a line, it helps. Or when the bars become smaller and smaller. Then also when the RSI crosses the 30% line and goes up. I've stopped here, and we'll come up with more videos on how to fine-tune our technical approach to trading either S&P, NASDAQ, or Dow stocks. Please do subscribe to our channel. We'll talk to you later. Thank you so much.